Before I begin to this video, let me give a quick disclaimer. I am not a financial advisor. The content of my videos represents my personal opinions and is provided for informational and entertainment purposes only. My information is not intended to be legal, financial, or an investment advice. Always conduct your own research and due diligence before making any financial decisions. Remember, it's your money. Please make informed decisions that are right for you. I'll never ask you for money, nor will I provide my phone number or personal email address. If you encounter any suspicious accounts or messages claiming to be me, please report them immediately as fake or scam accounts. Hey everyone, welcome back to the channel. The US market extended its sell-off this week, continuing the decline that began in late February. For context, the S&P 500 ETF VOO is down 6.91%, while the Nasdaq 100 ETF QQQ has dropped 9.81%, nearing the correction territory. Investor sentiment remains on edge, driven by key economic data and policy signals. Inflation concerns, interest rate expectations, and potential trade wars have all played a role in shaping the market movement. With volatility rising, let's break down what followed this week's price action and what to watch for in the days ahead. February's job growth came in at 151,000, below expectations of 160 to 170,000. With unemployment ticking up to 4.1%. Wage growth slowed to 0.3%, signaling a cooling labor market. President Trump announced a 1-month delay on the 25% tariff for Mexican imports and paused tariff on some Canadian goods until April 2nd, offering temporary relief to the market and trade partners. Fourth quarter GDP growth for the Eurozone was revised upward to 0.4%. Reflecting stronger than expected economic recovery. What does this mean for the market? Well, please stick around as we break down this week's market performance, analyze key trends, and explore how the above economic indicators could impact major asset classes. As always, don't forget to like, subscribe, and hit the bell button to stay ahead with all the latest market insights. In today's technical analysis segment, and before diving into the charts, let's take a step back and define what a bull market really is. A bull market is a sustained period of rising prices, typically marked by strong investor confidence, economic growth, and upward momentum in major indices. However, markets don't just move in a straight line. Trends form, strengthen, weaken, and eventually reverse. One of the most effective ways to analyze a bull market is by evaluating the trend itself. A strong uptrend is characterized by higher highs and higher lows, as well as key moving averages aligning in a bullish structure. But when that structure weakens, when price action starts showing cracks and moving averages begin to lose their bullish order, it can signal that the bull run is fading. In this section, we'll use the 50-day EMA, the 100-day SMA, and the 250-day SMA to assess the trend that began nearly 2 years ago. These moving averages help us to determine whether the market is still holding its bullish momentum or if we are seeing an early signs of a shift. Let's jump into the chart and break it down. Let's start this section with the US large cap market using the ETF VTWO that tracks the S&P 500 ETF. Now on this chart here, I've come ahead to identify the start of the current bullish trend that has been in existence sometime in October, and here you can see that we've been making a series of higher highs as well as higher lows, and this is what marks an uptrend. Now within the last few weeks there has been a sell-off in the market. We can see that by looking at the 1 month 30-minute candle. And now you can see within the last 1 month, where each candle represents the 30 minutes, you can see that we've been in a downtrend. So this is like a huge sell-off. Imagining holding your asset at the peak here at around 563 and till the current price today, this is almost like a 6% drawdown in your portfolio. And now investors are worried as the bullish trend come to an end, and we can assess that using the moving averages. So now if I go back to the daily time frame, now I want to depict what I'm trying to do here with something practical. Imagine you are driving from point A to point B, and you are approached, and you are driving on a highway, and now you approach a bridge, a bridge that's trending downwards. Even if without matching the accelerator, the car can move comfortably on that bridge. Now, the rate at which your car is moving on the bridge is the momentum. And now you want to see if your car is moving comfortably or it's reducing in speed as it's moving down the bridge. And that's what we want to track. This is the candle, which is the price asset, the price action of this asset, and it's moving. Now we want to see at what pace is it moving. And now, so if I activate the 50 EMA 100 to 50 crossover, this is a custom strategy that I developed, so it doesn't exist in default in TradingView, but you could actually assemble the 100 and the SMAs and the EMAs indicators to actually infer the same point that I will be passing in this video. So now if I turn this on here, now what I want you to see is that this strategy triggers buy signals, which is the long, as well as sell signals, which is close your order entry long. Now before we go to the current time frame, what I want you to see is just the signal before this vertical demarcation, which is here. Now a buy signal, which is long, is triggered when the 50 EMA crosses above the 100 SMA, when both curves are above the 250 SMA. So in this case here, we had a crossover, but because both curves are below the 250 SMA, the buy signal wasn't triggered. The buy signal got triggered here when both curves went above the 250 SMA. So that means a buy signal is also generated when the 50 EMA is above the 100 SMA, so long as both curves are above the 250 SMA. And so this is where our buy signal got generated. So at this point, this is telling you that, oh well, your car is in full mode in that bridge. So remember, I use the bridge to kind of give a practical interpretation of the chart. So you remember, when you first get to the bridge, you can start going down, but you want to wait for some certain minutes or will I say hours before you say, oh yes, we are actually in a environment where where the car can move forward itself. That's what we are doing. It does not mean that the car had not started moving from here, but we waited to get confirmation that, oh yes, based on some measurements we are taking, yes, the car is really moving on its own. So that's what this buy signal gives you. So it means it is a lagging signal, meaning the actual movement started here, but we waited to confirm the signal before we got a buy. And now similarly, the same happens with the exit signal. We didn't get our exit signal until this point here called close entry order long, where the 50 EMA crossed under the 100 SMA, and this is where we got our sell signal. But I also want you to know the car has started coming to a halt here when the price action went below the 50 EMA. But we took some additional, what I say, time duration to confirm that, oh yes, indeed, the car has come to a halt. It's not just a temporary stop or a temporary decline in speed, but a genuine halt. That's where we got this close signal. So it also means that you could have as well got out of the market from the first signs of slow, when the car starts to match its brake or take its foot off the pedal, starting from when the price went below the 50 EMA, which is here. You see, it went back again. So imagine this: the price, you matched the brake pedal, then again you matched on the accelerator, the gas, again you matched the brake, back to accelerator, and then the brake, and then it fell off. So you could actually get out or say that, you know, the strength is over from when the brake was matched in the first time in the first place. So that is how this signal works. And now, so what I want you to see is that this is where we got confirmation that yes, we're on the bridge again, and the car is able to flow, you know, by itself. And you see, and so this is where the momentum started. Ideally it started here, but this is where we got our buy signal. Here the brake was pressed, but you see there was still no cross under. It just showed you there is weakness. Basically that's what it means. So it's also good to wait for confirmation, remember. And then the accelerator got matched again, and that is what you see has been happening. Now here where we are currently, you can see that the price has gone below the 50 EMA as well as the 100 SMA, and it's looking as if we don't get market participants to enter into this market, there's a high probability that the 50 EMA is going to cross under the 100 SMA, which will generate our sell signal. However, in the short term, it looks as if there's a form of support here based on this long tail here, and to confirm that I can just add the 200 SMA on the chart, and it looks as if some buyers have stepped in here to kind of save the price action from this continued sell-off. So in the short term, it looks as if the 200 SMA is acting as short-term support, but in reality the momentum which started here, I can clearly say it has weakened. It hasn't ended yet, but it has severely weakened. So just as if that same car that we're talking about is in a stretch of a bumpy part on the road, and so it's slowing down to ensure that the car doesn't get damaged. That's what is happening now. Also, I want to introduce this tool which is called the Maxwell Suit Price Action. So you're going to go to your indicator and type Maxwell Price Action Suit and add it by someone called MX Will Capital. Add it to your price action, and I'll try to give a quick interpretation of how this indicator works. I wouldn't give a detailed overview of this indicator because there are a lot of I'll say signals you can get from this tool, but I want to focus on the message that closely aligns with what we are trying to address in today's video. So now if I open this tool here, if I show it, post it on the chart, you can clearly see what it does here. First of all, remember I mentioned we've been in an uptrend, and I told you you can infer an uptrend by a series of higher highs and higher lows. This Maxwell Suit can show you that on the chart. Remember, we're on the daily time frame, and look here, higher high, higher high, higher high, higher low, higher low, higher low. This is how you can see you are in an uptrend. So even if you can't interpret the chart yourself, you can use the Maxwell Price Action Suit to see that you are in an uptrend. Wherever you see, now I'm also going to take out the internals, just so that I can explain this chart better. So if I take that out, now just for this video, I don't want to complicate it. I want to make it as easy as possible. If you want a dedicated video on how I use this indicator, please put it in the comment section. Now here you can see higher highs, higher highs, higher highs, higher lows, higher lows, higher lows. So you are definitely in an uptrend. Now you see this order, you can also get this order meaning from this chart where it's called a break of structure. A break of structure. A break of structure means the previous higher high has been broken and you are going to create another higher high. So that means you are breaking the structure. This was a former higher high, now you are breaking that to form another higher high. And you see it is marked green. So green means bullish, green means good. You also have CHOC, means change of character. That means you are breaking structure. So in this case, this was our former higher low, but you can see this is the previous higher high. We made another higher high here, although it wasn't reflected here. You can change the settings to increase the number of the way you want the higher high to be labeled. Well, you can see because there's a break of structure here. So you can see there's a break of structure here. So it's telling you that we've made another higher high, but now we've made a higher low. That's why you see a lower low. That's why you see change of character. So market structure has been broken. Now another thing this indicator shows you are the demand and supply zones. The green box here is the demand zone, the red box here is the supply zone. These regions are areas of interest in the market. What does that mean? The demand zone shows that you have blocks of pending orders here, or in the past this region has been an area where price has reversed. You see, price was going down here and it reversed here in this area of interest, meaning there is a large block of buy orders that reverse the price action. So that's what is called an area of interest or a demand zone. Also, the area of interest here, which is the supply zone, is where you have pending sell orders, or where you've had an area where there has been intense selling activity in the past. So there's the assumption that you still have some pending orders left here, so that when price touches it again, the pending orders here get filled. Now, what can you use with this? What does this tell you? This area of interest is a area of potential reversal. And like I said, this is the view. You also see that this area that corresponds with the 200 SMA is also an area of demand zone. It's a demand zone, area of interest. So this makes it a two-factor potential for reversal, the SMA and the area of interest. So you see, price touched here and the remaining orders triggered this buy where the buyers have stepped in. Also, what you have here are the Fibonacci numbers. The Fibonacci numbers, we don't need to discuss that here, but that is what this is showing you. So to conclude, VTWO, we saw that there is weakness because the gap or the spread between the 50 EMA and the 100 SMA has reduced. We found support at 200 SMA, one factor, and the second factor is that the area of interest, we saw that buyers have stepped in, making it a two-factor reversal observation. Remember, the more you have confidence, gives you more confidence in your analysis. Now let's look at the next asset of interest. So let's turn this off, which is ASI, which is the Nigeria All Share Index. Let's look at that. Let's see how that market is performing. So if I activate my moving average crossover, clearly this is where we generated the buy signal, and you see we are still in a bullish cycle. You can even see how far apart the 50 EMA and the 100 SMA apart, showing you how strong this market is. However, in the recent days or weeks, we can see that the price action looks to be retracing back to the 50 EMA. In this case, I wouldn't look at the price action, but let's look at the price action to show if this area is a supply zone. So if I turn this off and I turn this on, yes, again you can see this is a supply zone where there's a bulk of selling activity in the past, and this is showing you the next demand zone. But this fair value and this here are called fair value gaps. I will try and explain it in my dedicated video on this indicator. Now let's move to QQQ. Let's see how that is on the chart. So the QQQ, if I turn on my moving averages, this is where the bullish run was confirmed, and again you can see that the 50 EMA is rolling over and looks to be touching the 100 SMA. So definitely there is weakness. In fact, the price went as low as the 250 SMA and found some kind of support. So this is a one factor reversal support region from the 250 SMA. If I turn my Maxwell suit to see what's happening, this is also an area of interest. So this is also a two-factor confirmation of reversal. The next asset I would like to look at is the small cap market, VTWO. Let's turn on the moving average. You can see that the bullish momentum is over. There's a cross down. We've also lost the 250 SMA. Let's look at the next demand zone to see where there might be reversal. We are actually in the area of interest where there's a demand zone, so perhaps this is a one factor trade. Perhaps there might be another moving average that aligns here. It might be the 300, it might be the 350. You will need to check that. The next asset I would like to look at is Bitcoin. Let's use the real asset itself. Bitcoin USDTC. Let's turn on the moving average too. The momentum is closed and the 250 SMA has acted as support. Let's look at what the price action suit is telling us. Yes, this is also an area of interest where price has bound. You can see the change of character to tell you where the market structure got broken. Lastly, let's look at oil commodity. This is where we'll be wrapping it up. But perhaps I might take another popular stock that we know of to just see what is happening. So now let's turn the moving average to. Let's turn on the moving average indicator. This is where the bullish run ended and the market has been trading sideways. Let's on the price action suit. You can see we've touched an area of interest. The demand zone and price might rally. Lastly, let's look at Nvidia, which was once the darling of the stock market. Let's look at and turn on our moving averages. You can see this is where the momentum ended and we've lost the 250 SMA. It looks like. Let's comment our market performance with the US large cap market tracked by ETF VOO, which recorded a week to date change of negative 3.41%. Year to date, VOO has delivered negative 1.73%. The short-term bias on the daily time frame exhibits a bearish trend, while the mid-term outlook on the weekly chart is neutral. Moving to the Nasdaq, represented by the ETF QQQ, this week saw a change of negative 3.86%, bringing its year-to-date performance to negative 3.80%. The daily time frame exhibits a bearish trend in the short term, while the weekly chart indicates a neutral bias in the midterm. US small cap stocks measured by the performance of VTWO this week posted a decline of negative 4.37%. Year to date, VTWO has delivered a return of negative 6.76%. In the short term, the daily time frame shows a bearish trend and the midterm outlook on the weekly chart is neutral. Canadian equities tracked by the ETF VCN printed a weekly change of negative 2.75%. Year to date, VCN has delivered a return of positive 0.85%. The short-term trend on the daily time frame is neutral, while the midterm outlook on the weekly chart is also neutral. The Nigerian market tracked by the ASI index this week posted a change of negative 1.19%. Year to date, ASI has delivered a return of positive 3.51%. The short-term outlook on the daily chart points to a trend that is neutral, and the midterm outlook on the weekly chart indicates a bullish trend. Oil commodity tracked by the ETF USO recorded a weekly decline of negative 4.30%. Year to date, oil ETF has delivered a return of negative 4.58%. The short-term outlook on the daily chart points to a neutral trend, while the midterm outlook on the weekly chart is also neutral. Finally, Bitcoin tracked by GBTC declined by negative 6.69% this week. Year to date, Bitcoin prices have returned negative 7.07%. The short-term outlook on the daily time is neutral, and the midterm outlook on the weekly time frame is also neutral. As we wrap up, the markets continue to show signs of short-term weakness, with the US large cap, the Nasdaq, and the small cap all in bearish territory. The Canadian market is slightly bearish in the short term but remains neutral in the midterm. Meanwhile, the Nigerian market stands out with a neutral short-term bias but a bullish midterm outlook. Oil and Bitcoin remain in a holding pattern, showing neutral sentiment across both time frames. Going forward, it's important to watch for any signs of trend reversals or further deterioration, especially in the US market. Stay tuned, stay informed, and as always, trade smart. If you found this update helpful, don't forget to like, subscribe, and drop your thoughts in the comments below. See you next time.